What's up, Focus fam? It's Focus Chan. Happy Wednesday. Happy Fed Day. Hope we all had a killer session and are enjoying this volatile market. Because if we look at the board here, guys, it has been a crazy day. We got snow up 15%, shop up 13%, and NQ here up 4%. This market just continuing to blow my mind, and hopefully we're all enjoying this madness. But I want to dive in, guys, as always, share my thoughts. Where do we go from here? We had a very, very important day with the Federal Reserve. But it is just extremely critical, guys, to step back. And, we've had days, look at this chart here, where we do start to explode. But we want to make sure that we don't lose sense of, what's actually happening here in the market. We take that look back, we remove our emotions, and we kind of see what's actually going on here. So let me dig in. Sit back, guys, relax. Let's have some fun here. So biggest thing, guys, like I'm saying, we want to put these, bounces into context, because even with, call it a bearish downtrending market, we are going to have those explosive moments and those explosive pops. And again, I think it's just so important for us to step back, be buying those dips, shorting those pops. And every time we get to major levels, right? When we get to major support here, we have to be open-minded of the idea that it could explode. We also have to be open-minded that when we get to massive resistance, that we could absolutely just give it all right back. So obviously, guys, if we just look at the daily chart here, this is something that I'm starting to observe, which is essentially just our downtrend from the highs. You can look at this on a daily chart, look at this at a weekly chart. This really is a very, good representation of a very critical spot here for the market. We're doing a good job of bottoming here for 3 weeks. And now we're starting to look pretty dang strong. The indicator here that I love to use is the weekly cloud. And last week in ES, we actually had our first close inside of this cloud, all the way. This has been the first one since COVID. So again, very large warning sign here for the market coming into this week was extremely critical. And right now we're getting a big bounce outside of this cloud back to these trend lines. Obviously, guys, we have a few days left here to see where we close. But this is very, very critical moment for bulls. And they're really trying their hardest here. So if we go back to the daily chart, guys, we're still under daily clouds. We still have, a lot of bearish structure. But again, I've said this in every single video I make. This is a market where anything can happen. One single headline can absolutely change it all. When you just continue to be open-minded, continue to play off of great levels, and as always, have a great analysis. So if we keep moving here, guys, we obviously want to talk about reversion to the mean. Because again, on these drops, all that we've really gotten is those reversions to the mean. We have spent, a day above it, but quickly right back below it. A day above it here and then right back below it. And ever since we've kind of, turned the corner here recently, we've had a lot of cleaner rejections at the mean. We get that flush, pop back, and we fail. We get that pop all the way back, we top out at the mean, and we fail. Last Friday, we gave the mean a kiss and dumped. But again, guys, no matter what's going on here, we got to focus on technicals. We can keep projecting, but if we're not going lower, we can just keep playing this ping pong until something gives. So obviously one of the most important things we want to watch to quote unquote give is the mean here, right? Do we actually have to put in a few closes above it? Or is this again, just another case where we stick our nose through it, trap some people, and then drop it right back down? That's a massive scenario here. So obviously, guys, if we look above, the mean back to this kind of range here, the top of this range, call it 4,400-ish, we also have the 200-day simple and we have the 50-day simple right around that key level. So we just draw a little bit of a zone here, right? This is the major range, guys, ahead of us. Maybe we do pop through the mean. Maybe we do hold the mean for a day or two. But now we really got to get through here. Market's still got a lot of work to do. And I think that's fine. Just playing on a day-to-day basis off these major levels, really an awesome market here. So if we just clear this up, guys, I want to go talk a little bit more technically on my intraday charts. Let me pull up what I got. All right, here we go. So before I keep moving here, guys, I want to just pull up a quick website on the side here. Alrighty, here we go. So very two important things that I do want to note this week, because, even with headlines, good, bad, ugly, whatever it might be, the market, guys, is always in some sense respecting what's going on underneath the surface. What I mean by that is when we look at this trading calendar from NASDAQ's website, this is an awesome calendar that I love. I recommend going grabbing and saving it, but it really explains a lot of, critical events that are happening underneath the surface. And, the big events that we have to deal with this week, we just look at the calendar and then we'll go read the key. We are dealing with the purple circle, which is triple witching. which essentially, guys, is a ton of expirations happening. Equity options, index options, and futures. A lot of madness there. And then another important thing here, and a very unique one, is our S&P Index Rebalancing. So essentially, guys, we're seeing a lot of things expire this week. We're seeing some funds having to do their rebalancing for the end of the quarter, and that's really leading us to an interesting week. Like I started this video with, we got through the Fed today. They raised interest rates to that 0.5, which again was expected. So market really is just got a lot to deal with here. But for the end of the week, guys, we've got through the Fed, and now we're just really going to focus on the triple witching and the S&P rebalancing. And I'll kind of tie that into what we're looking at here. So remember, guys, on triple witching and on events like this, you want to be very mindful of, big money destroying premium and kind of selling you the dream. Now, again, this can all be overridden by big news, big key levels breaking, etc. But if we just really recap, what we've at least seen for this week here, right? Last week, up near that, 4,300, that's where we just continue to reject, guys. That's where the mean has been. That's where huge liquidity has been. We just continue to kind of take these drops to the bottom of our range. So remember how it kind of has worked this week, right? If we look at Monday, we had this big little drop at point of control and then right back down. And again, guys, just potentially thinking about what's going on underneath the surface. Big money doing a good job of probably selling a lot of puts here to people, driving it all the way back to the mean, selling people some calls, dropping it all the way back to point of control, perfect liquidity bounce. And then big money ripped us here end of day. So again, guys, maybe triple witching they don't care about. They are just going to continue to kind of sell things on the way up, etc. But they can still drag us higher. Because again, with all these bigger catalysts going on, we had a potential treaty today, some news from Russia and Ukraine. That's obviously slightly bullish if and when it ever becomes true. We had the interest rates, etc. But another big thing to note here, guys, is if we do start to just break these key levels, we can see short covering. So again, be mindful of all the things happening underneath the surface. But I just want to lay out here very quickly, guys, the roadmap that I think we can take. So some big levels ahead of us. Again, guys, few monster levels I want to focus on. One is this 4,300 range. Right around here, I have some key levels you can copy, 4,306, 4,322. But this is where the daily mean is currently sitting, and it's where point of control was sitting. So it's massive liquidity. We have point of control step down here to start the week to that 42.12, and that's why we've kind of seen us open at it on Monday and fail, hit our key level, bounce back to POC. We hit the mean. We ripped down after the Fed right to point of control and then absolutely exploded. So you guys can see before liquidity would get to it and drop us, get to it and drop us. Now we're getting to it and exploding, getting to it and exploding. So we want to continue to watch this pattern. So, okay, guys, I'll wrap up here. Really want to focus on, dips at this point if you're looking to go long because we are ripping nicely. If for some point we pull back towards these point of control ranges, towards the mean, like we've talked about, guys, you really need to see if we start to hold these things because this could just be a case scenario where they pull the rug, they sell you calls, and we end the week right back in the middle here for triple witching. Maybe we don't. Maybe we continue to explode. But I want to watch, guys, if and when a relationship gets back to here, what does price do? Had a target here of 34.61. It looks like we ended the day right at it. So obviously, I just want to watch the continued relationship up towards 4,400 here. If we do continue, and then like we talked about up next, guys, would be that 50-day simple purple line and that 200-day simple up here near 44.50. So again, guys, look at the board today. Massive moves here. When the market's volatile and the market gets going in certain directions, we can really see larger moves. And again, that can be because rebalancing, people are buying the crap out of these things that are down, rebalancing their portfolios. It can also lead to short covering. We're going to have an explosive week here. It's been an explosive one and definitely could end that way. So again, guys, last little recap here. If we're above the mean, generally want to see if we continue to rally. 4,400 is going to be major, and that 200 MA is going to also be major. If we are right back below the mean and continuing to reject, then I really want to look, guys, back to point of control. This is a very important level to focus on this week. We've had a lot of great, interaction with it, especially, both of these zones. So that's where the focal point, guys, is going to continue to remain. If you hop over to NQ, just take a peek. This is a very important one as well, guys, because they've actually been lagging a little bit, right? They've been dragging, the market lower. A lot of, weaker stocks have been tech. And today they're just bouncing back super, super strong, up 4% to close the session. Insane. So again, a simple conversation here, guys. Really want to focus on the mean. If we take a look, the mean has just been around this 13.8 to 13.9 range, where that's where we've continued to get destroyed. Point of control on tech is currently around that 13.6. So again, just like ES, we die at the mean, we come back down these levels to start the week, we rally all the way back to point of control, all the way back to the mean, down to our levels, and then rip right back. So again, guys, let's work with what's in front of us here. For tech to kind of, really continue this journey, got to hold the mean, right? Got to hold that 13.9-ish range. And if we start to crack towards and through this 14K level, from there, guys, want to focus on getting towards 14.2 to 14.4-ish, this next big major zone above. Through that, we get the 50 hovering around 14.5. But again, guys, one step at a time here. Where if we do fail, if we do go right back below the mean, right? So we drop, break it, as you guys might imagine, focusing on point of control. So let's continue, guys, to play this ping pong. Let's continue to short highs, buy lows, focus on inflection points. And again, watch the map here. If we finally get out of this range, it could be a heck of a bounce and a heck of a rally. One day at a time, my friends. Let's go take a look at VIX here. Boom, boom, boom. So VIX guys did a great job of, always giving us great levels to kind of tie into our confluence here, tie into our analysis. Or VIX, at least for this year, we've been stopping around that 37.5. Just plain and simple. Go look at a daily chart. And when that happens, the market bottoms. So, a few weeks ago when we really, really dropped, VIX hit 37 and we bottomed. We take that slow, long journey until, last Monday here. We hit it again, and then we started to fail. What we did here, guys, right? We held that 29. We got back to that 32. But for today's session, we're back under 29, which hasn't been a while. So I want to continue, guys, to just tie this into our analysis because I hate the word easy, but it makes it, we'll use easy. Makes it much easier, guys, to build a strong analysis. But right here, if the market does not break 29, that means we just reject the mean. So that rejection of the mean to start the week. And then today at the mean, now we break through it and VIX breaks its levels. So what we want to watch, guys, on VIX is if we do see drops in the market, VIX is going to pop back to 29. But if it fails, those could be really good dip buys because it'll be like a dip buy at the daily mean for ES. So we get that pullback, find support, VIX finds resistance, and you get that reversal, right? Or we drop right to 25. Market pops a little more and then rolls over. So again, guys, want to time it with these levels. It's an inverse. If we're going 29 to 25, but it's bullish for mama market. And if we're heading back towards, we're going the opposite direction. In order for the market to really get crazy to the upside, ideally, guys, we break 29 and we start to, 25. We start to head back towards 20. Or again, if we do keep holding 25, like we've talked about, guys, this could just be a normal pop that does get shorted one step at a time. So I just want to share a few stocks here, guys, that I'm keeping an eye on. Some interesting ones as well. And first one I'll actually start with here is Snow. So again, guys, some stocks, right? You look at Snowflake today. Why is it up 15%? And I encourage you to ask yourself, why is Shopify also up 12%? And the answer, guys, is rebalancing, right? When we looked at that calendar at the beginning of the video, rebalancing is a major thing that we're dealing with. And again, what does that mean? It means into the end of the quarter, when funds have to show what they own, right, their holdings, typically they have rules that they abide by, how much we should own of this, how much we should own of that. And based off of what's happened that quarter, big funds have to come in and rebalance, buy some stuff, sell some stuff. So right now, guys, as we head into this rebalancing, right, as it's happening, as it's, about to end here, a lot of the stocks that have gotten their, absolute butt handed to them definitely can start to see some rebalancing, right? Most likely buying. No one has any more to sell. So names like Snow, names like Shopify, they've been absolutely destroyed. And now they're having monster moves to the upside. Again, what I believe is rebalancing. So Snow's a name here, guys, that had a monster move today. It broke through that earnings low of 184 and just a monster rip, right? Look at the size of these rips, guys. Rips through it, goes all the way to 200, pulls all the way back, and then does it again. Big money knows what they want to do here. Maybe they're done with it. Maybe it keeps going. But for snow, guys, I really want to pay attention to liquidity, where if we look at snow here, we got the mean up above near 224, and then we had point of control up near 219. So I just want to make sure these things are still accurate real quick. And boom, there we have it. So guys, maybe snow is done. This has been an awesome one off the lows here. Again, if big money is buying this at the lows, they're already up 20% on the stock. That's really good for your balance sheet, right? For your fund, whatever the heck you're managing. Maybe they keep going. If this thing actually gets to liquidity, guys, they're about 30% on their money off the lows. It's impressive. But again, for us as traders, we want to trade it. So again, guys, just want to keep an eye on snow. Ideally, we're getting dips, buying dips like this. That's the name of the game. But I just want to pay attention to this thing. If it pops through 200, I would not be shocked, guys, to see that 210 to 220 this week. All right, that could be a very explosive move, could be a very strong move, or maybe snow can just absolutely fail here. But I'm going to keep an eye on it as long as it's above 184. Maybe you get the chance to buy it there again, but back to 200 and through it, would not be shocked to see that 220. So remember, guys, right, their ATR is 20 points. So this is literally just a 20-point move heading into the end of week with 2 days left. If you could catch a nice dip on premium, nice entry here, again, big money might just buy the living crap out of this thing right to liquidity. Maybe they don't, but I will be there if they want to. And again, you can see it yesterday, guys. They just started to load this thing into open, gapped it up, loaded it open. It pulled back with the market implodes to lows. Snow does not go anywhere, right, guys? Note that. Market came all the way through lows, all the way back down to POC, and snow just sat there and waited and then exploded. So you can tell what they want to do with it. We're seeing massive volume here. Let's see what happens. And then another name, guys, that kind of fits that script is Shopify, a name that's been getting absolutely destroyed. It only makes sense that at some point these funds are going to have to buy their way back into it, right? So for Shop, guys, this is a name that also has not really reverted to the mean in a long, long time. Or if you look at the daily chart here, actually, on this entire drop, it has barely kissed that mean. What a mean stock, not giving it a kiss. So again, guys, these are stocks that can just continue to rally. Shopify's had a pretty impressive 2 days here, so maybe it's over, and maybe it absolutely implodes again. But I want to pay very close attention to these stocks because, again, I think they're on people's eyes, right? They've been rebalanced into. Shop starts the week here just getting bought up, rips the point of control, finds its feet, breaks this beautiful trend line, rips that monster zone that I've been talking about here on Shop, pulls back and holds it, and off to the races. So again, guys, maybe these moves are over with, but I do want to continue to keep an eye on these names that have kind of shown they're getting rebalanced into. See if we get dips to 600 on Shop. I think it could end the week at 660. If it does break 600, guys, and head back to this key range, then hey, nothing to do here. And maybe, guys, again, look at the mean on Shopify. Maybe this is exactly where we want to short it. But ideally want to get a little bit of a dip, play it back into that level, actually get it to the mean, and then maybe we go back to shorting this thing. But one step at a time. Other than that, guys, everything's going to be flying here with the market, right? You could buy calls on anything here. Google explodes, Nvidia explodes, Amazon explodes. As long as we're following the overall market, whatever you would like to trade, just tie in this analysis, my friends. But happy Wednesday, guys. Cheers. Again, I hope we survived today. What a wild one. I know I need a nap, so I'm going to go take it. But cheers, guys. Please like, comment, subscribe. Do all that if you like the content you're getting. Appreciate the support. I'll talk to you guys soon.
Hey, Focus Chan here with Simpler Trading. Thank you guys so much for watching this video. If you enjoyed it, please make sure you like, comment, subscribe, turn on notifications so you don't miss anything that we do. And if you want to see us trade our money live in real time, go to simplertrading.com and you can sign up for more. But happy trading, guys. Stay focused. I'll talk to you in the next video.